my son was born about 2 months after we completed.
Oh, really?
So you've got to think, at the time, I'm trying to get this deal over the line.
Yeah.
I'm burning through my personal savings, right?
Yeah.
The savings that I actually need as equity to put into the deal.
Yeah. Yeah.
To obviously pay the legal fees, the DD, all of these different things. So I'm absolutely stressed out of my mind.
Yeah.
And I've got a pregnant partner at home as well, and a baby on the way.
Yeah.
So it was
7-month pregnant partner at home.
Exactly.
He's probably not got a great deal of patience for your shenanigans off buying companies. And Welcome to season 2 of the Founder Funded podcast, a podcast for searchers by search experts where we explore the route to business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Gerald Edelman and founder of the ETA Awards. Let's get into it.
I read this book and straight away I was like, oh, I didn't even realize this was something you could do. So if things do go wrong, I've got someone's shoulder to cry on.
Someone's couch to sleep on or whatever.
If
it goes that wrong.
Now that I'm thinking about it, you're kind of bringing all of these war stories back into my mind.
Today I am here with Darnell Irozuru, CEO at Birch Faraday Capital, and importantly, winner of Self-Funded Deal of the Year at the 2024 ETA Awards. Darnell, great to have you here. Thank you for coming to talk with us. It'd be good if we could start perhaps with a bit of background from you about your kind of career up until you got into the world of acquisitions.
Yeah, of course, and great to be here. Thank you for inviting me, Carl. So in terms of my career, I started my career in accounting and finance and then transitioned into corporate finance M&A. But I've always been quite an entrepreneurial person. So even in my first job out of university, I started a tutoring company on the side and was actually making more money from that than I was from my day job.
Excellent.
And so, I've always had ambitions to kind of scale something and build something of my own. And, in the case of that first venture, it didn't work out because I didn't feel like I could scale it. And so I moved on, but I kind of took the lessons from that first business idea and tried to apply it to other things that had varying degrees of success. But with every attempt at building something of my own, I kind of learned something else that I was able to take on to the next venture.
So you came out of university, got a job, set up your tutoring company on the side, and obviously it wasn't capable of scaling. But still definitely an interesting thing to have done such an early stage in your career. How did your career then progress as you kind of moved on from that point?
Yeah, absolutely. So after I qualified, I kind of realized, there's a limit to how far I can take this agency on my own, and I just didn't see the possibility to scale it to justify, sacrificing my career at that point. But I realized, very quickly into my career, probably within the first 2 or 3 years, that I didn't want to just be a career person. I wanted to build something of my own. And so, I started to think about, how can I build a buffer that will allow me to then pursue whatever entrepreneurial ventures or ideas come up. And so I started to get into something called FIRE, which is Financial Independence, Retire Early, which effectively is a kind of smart way of saying build enough passive income so that you don't need to worry about paying your bills and things of that nature. And
so what you came across this thing called FIRE. And I guess it's just kind of a concept, is it, that you read about? And so how did that then steer the decisions you made in your career or work?
I realized that it would be, if I saw my career as like a 10-year journey rather than 20 or 30 or 40 years, as is the case with most people, it would make sense for me to maximize my income now rather than maximizing it for the next 20, 30, 40 years. So I moved into consulting contracting, where I effectively was trading career advancement for higher income today.
Got it, okay.
And so I was able to essentially take the funds that I generated from contracting and put them into income generating assets, so shares, property, equities, and other securities that were able to, over time, generate enough passive income for me to not need to worry about bills. And this was when I was single, without kids, so obviously my outgoings were a lot lower than they would be now.
So no, that's really interesting actually. So you focus on getting as much income in at an earlier stage, so that you can then use that, and I suppose the beauty of compounding over a much longer period than I suppose a normal career trajectory where you kind of start off earning less and gradually progress and earn more and more and more, and you're earning more maybe when you're in your 40s and 50s.
Absolutely.
But at that point, that income or the assets that yield from the income have much less time to compound before you kind of want to retire, right?
Yeah, absolutely. But that was a very deliberate decision that I made because, I'm a finance guy, so I love a nice model. So I literally I said, okay, what happens if I go the career route? I kind of roughly worked out, okay, I'll make this much at 30, this much at 35, this much at 40. And then I looked at, okay, well, what's the alternative if I choose to kind of sacrifice that career uplift for the sake of more income now and then build a business that does X amount per year? And I just felt like the latter option was the better choice.
Very clever. I like it. I like that.
So I think a lot of people, they think of being an entrepreneur is all about taking like crazy risks, but I think it's more about like managing and understanding risk. And I think that's what I was quite good at, saying, okay, actually I can see the risk of obviously sacrificing my career, but I can also see the benefits and the trade-offs. And as long as you go in kind of aware of that, I think you'll do well.
And I suppose it's and I suppose the formula there is, what are you giving up? Well, you're giving up more certainty and career progression, so you could set yourself back if you revert back to the kind of ordinary career path. What are you getting in return? Higher upfront income, and the potential to invest that and put it into something that is far greater. And I suppose, being a finance guy and looking at the numbers and looking at the risk reward, I guess you weighed it up and thought, right, that's the route for me. We'll get into it later, but it sounds like it's worked, right, so far. And so, okay, you came across this FIRE thing and that led kind of the overall big picture decisions. But then how did you hear about entrepreneurship through acquisition? Because I guess a lot of people will think, okay, I'm going to have to then found a business, I'm going to have to come up with an idea and start something and invest my time and money into that. Not many people are aware that you can kind of acquire existing businesses. So what was your entry point into that community?
Yeah, absolutely. So for me, the inflection point came when I managed to kind of take the funds that I generated and I put them into, or some of those funds into starting a recruitment agency. That agency did quite well. I managed to make a decent amount from that. I ended up selling it in the end. And then I had officially reached FIRE. And I was bored. I was like, well, I don't want to just sit around with passive income, and I don't really want to continue consulting because I don't see myself doing that for 10, 20, 30 years. Obviously the traditional career wasn't really something of interest to me. So I went through a bit of an existential moment, and I just happened to be reading a lot at the time, and I reading a lot of business and finance books as well. And I came across this book called, I think it's The Harvard Business Review Guide to Buying a Small Business. So very, serendipitous. And I read this book and straight away I was like, oh, I didn't even realize this was something you could do.
It's that epiphany, isn't it?
Yeah, absolutely. And the idea captivated me immediately. And I'm someone that has a bias towards action. And so as soon as I realized this was something I wanted to pursue, I was quite quick in setting up the structure to make that happen.
Excellent. It's a common theme that people come across this, don't realize that it's possible, and then when they come across it, they're like, wow, and then become quite obsessed with it, which is clearly what's happened with me as well, which is why we're sat here doing a podcast about the very topic. So yeah, that's great. And so you found it and thought, right, I'm doing it, and so how long ago was that?
That was in 2020 actually.
Right,
So around
okay.
2020, 2021.
Yep. So not that long ago.
Not too long ago, no.
Okay. And so, and at that point, then you weren't kind of working in employment as such. You were just consulting. So I guess you had that time freedom to work on it. What was your initial intention? Was it to acquire like just a single trading business and go in like a more traditional search type setup?
Yeah.
Did you consider, because I know you did it self-funded in the end, but did you consider raising a traditional search fund?
I did consider raising a traditional search, and originally, my idea was to go with traditional search fund routes, and so that's the structure which is most discussed in those type of books.
Yeah.
And I think what made me deviate from that was less about the attractiveness of that structure for me, but more about the fact that as someone who had a bias towards action, I didn't want to give myself an excuse to not start. I didn't want to say, okay, I'll start looking for a business once I've raised a traditional search fund, because then you're just giving yourself another reason to procrastinate. So I said, no, what I'll do is I'll find the business, I'll structure a deal, and then if I need the equity or whatever equity is required, that's when I'll start reaching out to investors.
Okay. It's funny because, I've had conversations before with people who have said similar, that, they were looking at raising a traditional search fund and found themselves using it as an excuse to procrastinate.
Yeah.
I think, it's a big thing going, particularly if you've been in employment, which a lot of people have, they've been in quite serious jobs and stressful jobs, and then go, right, I'm going to go and buy a company. And it's such a different thing, and suddenly you're alone, and you, it's quite scary. And I think sitting there writing a deck is probably something that feels quite normal to them. And so as long as they can stay in that nice safe, I'm building the deck, that's why I haven't done anything yet.
Yeah, like you kind of convince yourself that you're doing something productive, even if you're not actually moving forward.
Yeah, well, I can't do that yet because I haven't done and whatever it might be. And I think, that action is, often it's often like when you've got a report to write, you don't know where to start. Just start writing something, right?
Yeah.
Just do it. Just do the thing. And so, I think that's a really cool story. So you thought about that, and I guess you thought, right, let me just go and find a business, and then I'll go and talk to investors when I need to, if and when I need to. What was the approach? Was it kind of, obviously you'd done some work in the M&A space before. So I guess you had a lot of contacts in brokers and things. Did you go brokered, or did you do proprietary outreach?
So I did a combination of both. I found some really interesting opportunities through proprietary. Didn't end up working out in the end, and found some great opportunities brokered as well. I think I wouldn't say I had a preference for one or the other, but I think you should definitely use both avenues.
Yes. Yeah, I think putting all of your efforts into one or the other is just doing yourself a disservice.
Yeah, absolutely.
So you did both, and the first deal, because obviously we'll get onto the fact you've done more than one deal since you started. But was that a brokered one? Was that through a broker?
Yeah. So the first deal was through a broker, which one of my interns actually found. So I did things a bit differently to some of my other ETA colleagues, in that I hired quite a large team of interns, and I kind of bankrolled their salaries through my consulting.
Right, okay.
And that's something which I think was unique to the period, because I don't think I could have done that if not for the fact that we were kind of working from home, and it meant that I could manage my day in a bit more of a, with a bit more freedom.
Yes. So in terms of when you were delivering your consulting hours.
Yeah, absolutely.
Versus...
So I could get up at 5 a.m, work from like 5 until 12, let's say, on my consulting stuff, and I could, check in with the interns from like 1 to say 3, and then, and so I had a lot of flexibility to kind of manage a team outside of my consulting engagements that perhaps would have been difficult otherwise.
Got it. And how many interns did you have?
I had a varying number, but the peak were 3.
3, okay.
Yeah,
and did you have quite a structured kind of weekly plan for them, or how did you manage them? Like, what was their mandate?
Good question. So there wasn't really any structure beyond, I'm going to teach you how to do some basic modeling. I'm going to make sure that there's a funnel there so that you're getting deals coming through. You're building and developing relationships with brokers directly, with and then just running with it on that basis. And
okay. So you gave them skills, gave them kind of the basic skills, and then said, right, off you go, go and do it.
Yeah, pretty much.
And the first deal you did came through one of them.
Through one of the interns, exactly. Yeah. And my philosophy was always, you hire smart, hungry people, and you just let them kind of do their own thing rather than try to micromanage. And it seemed to work very well in that case. Perfect,
amazing. So you identified this deal that you liked. What was it that stood out? Tell me about the first business that you acquired, and I suppose what was it? What you were looking for, or was it just a nice business that you happened to come across? Or
no, it was fantastic business. Business called Medline Supported Living. So what they do is they provide support to individuals with complex care needs, mental health issues, challenging behaviour, autism, and other learning disabilities. And they operate across the Northwest, Manchester, Liverpool, Wigan, Lancashire. And I think because I'm from the North and from Manchester, there was like an immediate affinity.
Yeah.
And so I think that was probably the first separator, or the first thing that made me think, okay, this is an opportunity which, worst case scenario, I can always move back to Manchester and run it myself. And, at least I'm close to family, I'm close to a support network. So if things do go wrong, I've got someone's shoulder to cry on.
Someone's couch to sleep on or whatever.
If
it goes that wrong.
So that was, certainly one of the initial deciding factors to pursue this in more detail. And then, again, like I said, I'm a finance guy by, trade. And so I was able to look at the price that was agreed and accepted and, realize that just purely from a numbers perspective, it was a great opportunity.
Okay.
Now, outside of the numbers, it was a great opportunity as well because Medline has a fantastic reputation for delivering phenomenal care across all of its services. And so, I wasn't just buying a business that was, making a meaningful difference in people's lives, but I was also buying a business that was actually, at the time, a genuinely good deal from a finance perspective.
Yeah.
And so it ticked all boxes.
Being a business owner, or being responsible for running a business is exactly that. There's a lot of responsibility to the team, to any of the employees, any other stakeholders, the bank or whoever it might be. But actually, in a business like this, there's a wider responsibility as well, right? You're delivering very important services to vulnerable people.
Absolutely.
And was that something that you were anticipating taking on in acquiring a business? And how has that impacted your decisions that you've made?
Yeah, absolutely. So because it's not like you're just buying a business which manufactures and sells widgets. You're buying a business which is actually making a meaningful difference in people's lives. And as you said, you're working with vulnerable people. And so there is a level of responsibility there which, isn't necessarily present in other types of businesses. And so when I bought the business, I was very clear in that I wanted to make sure that the existing management team were incentivized to stay. And so there was structure put in place to make sure that was likely to happen. I also wanted to make sure that there was a kind of a CEO / MD of that business, because as much as I want to say I'm confident in my abilities, I don't have a care background. I never worked in care. And so I wanted to make sure that there was someone to oversee the business who had that expertise. Because like you said, we're not just selling widgets here, we're dealing with people's lives. And so it was very important to me to make sure that the right structure and the right people were there.
And was that a departure from your original intention? Did you think that had you bought a business that didn't require that level of knowledge of a specific industry, would you have gone in to run it? Or did you always have the intention to kind of put a management team in?
I think it's honestly hard to say.
Okay.
But now that I've made that decision, I'm glad I did. Not just for the reasons I mentioned, but also because I do think that my strengths lie more in the strategic deal-making aspects of the searcher role rather than the day-to-day operational aspects of the role.
Yeah. Though I think it's really good to know your strengths.
Yeah.
And, more important to know not necessarily your weaknesses, but to know where actually someone else could probably do it better, right? So there's no point in trying to be the best at everything.
Yeah.
If you know your strengths are there and you can find deals and create opportunities and offer strategic advice, but not operationally get into the weeds and run things, it's going to yield the best result for everyone, isn't it?
Yeah, absolutely.
Yeah. And so the CEO or MD that you put into Medline, was that, have you offered them some sort of incentive for growth, or did they buy into the deal, or are they?
Yeah, so they actually did buy into the deal. They put a little bit of money into the deal.
Great.
So confidence in the opportunity. They do have an incentive as well to stay on and try and make this work. And so far so good, really.
So tell me the date that was acquired, roughly.
So Medline was acquired on the 28th of July 2023.
Roughly 28th of July. Okay. Yeah.
At 12:01.
Yeah. Cool. Okay. So 2023.
Yeah.
Your first deal. So I guess that initial kind of search period was what, about 18 months? A year? 18 months?
It was literally. So I think we started searching properly around September 2021.
Okay.
We found the deal in July 2022.
Right.
Which I think is quite a long search period. Certainly longer than some of the guests you've had on here. And then it took us a year to complete the deal.
Yeah.
And there are many reasons for that. It was an incredibly complex deal and complicated process. It took us a year to complete.
Right.
And there were many reasons for that. Getting the lenders on board was a challenge because, rightfully, the high street banks were incredibly nervous to lend to a first-time operator, first-time buyer, and the amount of information they required was very extensive. And so we did have to seek finance from challengers in the end, which did extend the process somewhat. Thankfully we worked with some lenders that have had a lot of confidence in us, and we actually have completed with the same set of lenders on the second deal. Just to sort of go back, the deal took a year to complete. I don't expect that to be the case for any future deals, and in fact, it wasn't for the second deal we worked on. I also want to say that there were many times during that year where I genuinely didn't think it was going to happen, and I thought, okay, I've spent the last sort of 2 years of my life on something which is just going to come to nothing.
Yeah.
And so, that moment when we got the keys, so to speak, was probably the best day of my life.
Yeah.
The best day of my life at the time. Obviously, my son being born was actually the best day of my life.
Yeah.
That was after.
Yeah, exactly.
And in fact, my son was born about 2 months after we completed.
Oh, really?
So you've got to think, at the time, I'm trying to get this deal over the line. I'm burning through my personal savings, right?
Yeah.
The savings that I actually need as equity to put into the deal.
Yeah. Yeah.
To obviously pay the legal fees, the DD, all of these different things. So I'm absolutely stressed out of my mind. And I've got a pregnant partner at home as well, and a baby on the way.
Yeah.
So it was
7-month pregnant partner at home.
Exactly.
He's probably not got a great deal of patience for your shenanigans off buying companies. And but and I suppose obviously the intention was that they would have completed far before that, so you didn't think you'd be in that position. But it comes back. There's just these recurring themes of resilience, right? Because it's a brave thing to do anyway, but to stick with it. I think people could probably look at this community and look at the people and think, these guys, they've been lucky there, or that they've found a really good deal, and it's once you do that, it's easy.
Yeah.
But it's not, and it's not just not easy. Even if you've got all the skills and all the advisors and the lenders on board, to hold your nerve. Right, and particularly with those personal circumstances that you've got going on as well, there's a massive payoff.
Yeah,
But
yeah.
for a huge amount of invested
For a huge
risk.
amount of invested risk. In fact, now that I'm thinking about it, you're kind of bringing all of these war stories back into my mind. There were many moments when we had lenders on board, and then the lenders were like, "Oh, actually, no, we can't do this deal for X." I won't mention the lenders specifically, but there were a couple who were super keen, and then you're on a massive high, and then 2 weeks later, once the DD's progressed, and once you sent them the information, they're like, "Oh, actually, we're not interested in this anymore." And now you've got to go and find someone else.
Yeah.
And now you have to deal with a very impatient seller who you've told you've got funding for now, who you're now telling something different.
Yeah.
And so, there were so many highs and lows. And in all honesty, I would not want to put my worst enemy through what I went through in that year in terms of the highs and the lows of getting that deal over the line.
Yeah, no, I bet. I think another theme that comes up a lot is the debt issue, and I think you've been probably a bit polite about the high street banks there. That is a problem. It is a problem. I think it was Medline that's got the real estate aspect as well, which is very unusual in a search type deal.
Yeah.
And so I suppose that helped to some extent, but also added complexity as well. Would you say that's a fair assessment?
Yeah, that's a very fair assessment. And in fact, it was a real estate that really prolonged the deal due diligence and the whole situation beyond what it probably needed to be, because you have to have a separate lender. You have to have, there's a lot of DD around all the properties.
Yeah.
And so although it was advantageous from a sort of funding perspective in some areas, it was also, challenging for other reasons.
Yeah, and I suppose there's also the regulation, right? Because I imagine you've got CQC, the Care Quality Commission, and there's all these things that you need to check, which obviously you got there and it was all fine, but there's lots of other elements to this deal than compared to, for example, a widget manufacturer, right? Where you go, well, does the machine that manufactures the widgets work? Yes, great, buy the business. There's so many other aspects to it which add complexity. So, it's not surprising, particularly the first time buyer, and all these elements that it took a long time. Obviously everyone would prefer it not to have taken a year, of course, but I think it's an incredible feat to have achieved. And so that was January 23.
July 23.
July 23. Yeah. And you've acquired another business since?
We have. So we acquired Medline in July 23. I then wanted to spend at least 6 months just really trying to understand the business, because there's only so much you can get from looking from the outside in. Yeah. And so I really spent that time getting into the weeds. Wasn't interested in any other deals or anything like that. Just really wanted to sort of stabilize things. And so for the first 6 months, we didn't want to make too many major changes. Obviously, the MD Chris came in as well during that period. And so we didn't even think about looking for any other deals until 2024. And we did find it quite challenging to find deals of good value. But we managed to come across Hybrid Support Services, which is the business that we acquired around kind of August, September time of 24. And, we went from agreeing terms in September to completing in December. Yeah. So it was a much quicker process.
Much quicker, yeah.
I think a big part of it was the capital gains coming in.
Yes, because
so
of the
there was an incentive for the sellers to actually, make things work. And I think what was interesting was the fact that the seller had a really good advisor on board as well, which I think made the process a lot easier than it was with Medline.
It does, and it's a little bit. You'd be kind of forgiven for thinking that it's great to have a deal, proprietary or otherwise, where you've not got a proper advisor on the other side, and you can pull the wool over the seller's eyes, and and actually you can get a great deal. But I've talked about this before on the podcast. A good deal isn't a win for you and a loss for someone else, right? First of all, because it's just not. You know that something's going to come back to bite you later.
Yeah, absolutely.
You want a fair deal for everyone, and the easiest way to get there is for the seller to have a good, trusted advisor that can explain to them, look, actually, these are the boundaries. This is a good deal. You telling them it's a good deal is not gonna it's not gonna convince them. You can say it as many times as you like, but you're the buyer. Having someone on the sell side with experience, it does make it really much easier, right?
No, I completely agree. I think the advisors on that deal were fantastic, and in terms of like managing expectations, exactly like you said, where you know they can act as like a sense check for the seller, and you know, tell them, is this a good deal? Is it not a good deal? And so not just that, but also you know, smooth things along in a way that is quite difficult if a seller's working on their own, in terms of getting information, in terms of knowing what kind of information in advance the sellers are likely having it prepped. Precisely.
Yeah. And I suppose as well, you know, second time round, you're now not a solo searcher with your first acquisition. You're a business owner bolting on something in the same industry.
Yeah, absolutely.
Which I guess from a credibility perspective, you know, you haven't got, there's far fewer hurdles to cross, I suppose, to get in and start those conversations.
Yeah, absolutely agree. And I think, you know, the floodgates have really opened since that second deal, actually. And I think, you know, now it's not just a fluke, is it? Because we've done one, we've done two. Okay, these guys are actually serious. And so, you know, I think in the last, you know, 3 months, we've seen more sort of really interesting deals than we saw in like the previous year.
Brilliant.
You know, beforehand.
That's excellent. Cool. So I think it'd be useful as well to talk a little bit about the deal structure. So obviously you've got some debt in there, and we, you know, we can talk about either or both as you prefer, but I'll just speak generally for now. You've got some debt in the deals, and you've got some external equity.
Yeah.
But you know, having been a kind of serial entrepreneur in the past, and having your kind of FIRE concept, and I guess generating and holding some assets prior to doing this, you were able to fund most of the acquisition, most of the equity yourself. Yeah,
absolutely. Yeah, I was. So I was, again, very kind of fortunate in that, you know, over the last 8, 9, 10 years, I'd kind of snowballed the gains. You know, I'd taken the gains from my first little, you know, tutoring agency in 2013, and then kind of snowballed that into something, and then, you know, over time it accumulates, and so I was able to have a nice little nest egg that I was able to put into the deal, which funded a large part of the equity. But I did have to, you know, double down. I had to remortgage my house. I had to borrow personally, and that all went into the deal as well. As you know, equity. And you know, what was required beyond that was kind of a small sort of friend and family raise. But the vast majority of equity was kind of my own personal contribution. And some people might say that I'm a little bit crazy to remortgage my house to fund the deal, but it was because I could see it was a great opportunity. And I was willing to do almost anything to make it happen.
Amazing. And it's really inspiring, to be honest. And I think, you know, that I'm sure helped with the debt as well, because let's see, well, you're putting everything into this.
Absolutely. And that was also a major reason why the kind of friends and family got behind me, and also a major reason why the lenders got behind me, because they could see, okay, this guy has serious skin in the game. If things go wrong for us, okay, we lose, you know, 10 grand, 20 grand, whatever they've put in. If things go wrong for me, it's like everything gone.
Shirt off your back. Yeah, that's it. Yeah. No, incredible. So, you know, as a result of that, obviously you've retained the vast majority of the equity, which is great. You've got a lot of prefs in there from some external investors, but, you know, you're effectively almost entirely the owner of the ordinary equity, which is fantastic. What's the plan? I mean, I know you said you've seen a lot of kind of deal flow recently. Is the intention to continue buying things and just kind of expand the business in the industry? look at other industries and kind of more of a holdco model.
Yeah.
Sell it and invest in, some sort of yielding bond that means you've got your fire situation reset. What's the plan?
Well, I know I'm quite certain that I do not want to fire. Let's put it like that. Okay. I do not want to retire early.
Yeah.
I absolutely love what I'm doing now, and I think the intention is to just keep going. To build kind of, as you mentioned, that holdco model where you've got the top co and then you're investing and buying other businesses, and we've got our platform company in the care industry, and the intention is to scale that. But we're also open to looking at opportunities outside of care. And my ultimate ambition for the care business is to grow in a responsible, sustainable way. So we do want to do more deals. We do want to grow the business. The ambition is to take us from where we are now to 100 million turnover within 3 to 5 years. That's what I tell people.
Wow.
But we want to make sure we do it in a responsible, sustainable way. Again, because we're not selling widgets here. We're dealing with vulnerable people.
Yeah.
So ultimately, we want to make a meaningful difference in more people's lives, and the way that we do that is by growing the business organically, by buying other businesses, improving them within care. I'm talking about, and then I think longer term, I haven't really thought beyond kind of a 5 or 10 year plan, but ultimately, I don't see why we can't transition to something more akin to the holdco model that you've seen done successfully so many times before.
Yeah, I think it's that point you made there about sustainable growth kind of focuses the importance of people like you, searchers who, and actually maybe not necessarily like a traditional search fund, but more someone who's retained a big chunk of the equity, or a holdco that doesn't need to exit.
Yeah.
Right. So you don't need to grow it in 5 years to get a certain IRR for your investors.
Yeah.
You can take your time to grow it in a way that is appropriate. And I think in the long run that will probably yield a greater outcome for the vulnerable people you serve, the community, but also probably your investors and yourself long term.
Yeah, absolutely.
So that's a really nice strategy, and I think it's great that you're in a position to be able to do that. So keep going, keep buying. You're enjoying it. That's great. And potentially to kind of go out to other industries opportunistically.
Yeah, absolutely. I think the plan across the next kind of year or two is to grow Medline, grow Highbury, bolt on other deals within the care industry, to potentially branch out as well, and to potentially also raise some external equity. But as you said, because we're coming from a position of relative strength, the aim is to hopefully raise the majority of that through preference shares rather than having to sort of give away any sort of common equity. Yeah.
And in terms of the exit, if and when it does come, I mean, I guess it's not inconceivable that you now have a family and maybe that this turns into a personal investment company and you just pass it along and you never sell. But have you thought about what an exit might be? I know there's a lot of these holdcos out in Scandinavia, for example, particularly Sweden, where they list them. So and then there's kind of, although there's not a huge amount of liquidity in the markets for this type of business, but there is an out, right? There's a way that you can then dispose of shares over a period of time, or hold them, or kind of dilute your shareholding without necessarily losing board control, for example. Have you thought about what it might look like, or is it just too early?
I haven't thought about that. I'm just focused on building at the moment.
Yeah.
Just building something that will last, and which is a genuinely good company or set of companies.
Yeah. It's quite nice to hear that, actually, that, the focus is just on making it better and without any pre-planning on how you cash out, right?
Yeah.
Which is nice.
Yeah, just kind of looking for the exit door before you've even built the business.
Exactly. Yeah. So it's obviously not been easy, right? And I think there's something that's quite clear is where you said you wouldn't wish it on your worst enemy, to kind of go through some of that stuff, right? Because it's soul destroying, I imagine, when you're like, yeah, this is going to happen, and then the next day they're like, actually, no, we're not going to fund it. And then you think, well, this deal's just not going to happen, right? Because what deal happens after a year?
Yeah.
Really?
No, it's true.
They don't, but it did. So obviously you would have learned a lot through that process, I imagine. I mean, that's clear based on the fact that the next deal took 3 months. So what advice could you give to someone who wants to do something like this? And it could be, don't do it, but it could be make sure you do X, Y, Z. Like, what's the kind of the key learning that you've had?
I think just make sure that all of the kind of major people in your life are on board and understand the potential implications. Because my partner was an incredibly supportive, and I don't think I could have done it without her, because ultimately she was, during those moments when things were looking pretty bad, she was like, Darnell, I know that you don't want to work for someone else. That's just not who you are. You've got to keep track. There was one point in time where I was like, oh, maybe I should just kind of go back to a career and see how that goes, and if I keep working hard I can be like a director and so on. So she was like, no, that's just not you. Like, let's take this journey to the end, and we see where we get to. So I think having that support network is incredible, and definitely something I would advise that you kind of make sure that you have. If you don't, then find someone who can help you out. And I think it's particularly important when you're a solo searcher, and I think that's one of the reasons why many investors do have a preference for partnered searchers, because having that partnership, having someone to pick you up when you're down, and vice versa, is really powerful. And solo searching can be a very lonely place. Well,
and particularly solo searching self-funded, because you don't even have your investors to go to, right? You don't have that support. It's something that, this is why I admire searchers so much, particularly solo searchers, and actually particularly those who are, who've done it self-funded. I think there's huge merits to the traditional model. There's pros and cons to both, but I think when it comes to like the entrepreneurial scale, solo self-funded searchers are the ones who are right at the entrepreneurial end, which rings true to your background as well, right? And the things you've done in the past. So yeah, I think it, you have to be incredibly brave to do it, and have conviction and resilience. But as you say, also have people, everyone around you has to remind you, look, remember why you're doing it, because it must be, 9-10 months into a deal that still hasn't happened. Naturally, you're going to be thinking, oh, hang on. Yeah. Should I still be doing this? Or am I, And then it becomes an exercise where you're having to motivate yourself every day. Yeah. You get up and you're like, okay, I know it's been 10 months, but we can make this work because of X, Y, Z. And I think you have to have a massive amount of, some might say mental resilience, some might say self-delusion. Yes, yeah. There's sort of a Venn diagram, isn't it, of those things, and Darnells in the middle, which is it's good. You're right. It's there's a grey line. So that's really useful advice. I think people will take a lot from this. Are there any other things that you that you think you wish you knew before kind of making a move to do this, or before deciding to make a second acquisition, or before deciding to put an external manager into the business? Is there anything that people who are thinking about doing it or about to do it and about to close a deal, is there anything else that you wish you knew?
Yeah, of course, absolutely. Tons of things I wish I knew and still don't know, and I don't know what I don't know. But I think making sure that you have. I'm going to go against the grain here and say I think it's probably a good idea if you do specialize quite early, and say whether it's care, whether it's manufacturing, whether it's consulting, accounting, whatever it is. I think if you can drill down early, then you kind of have a rough idea as to the multiples in that sector, the type of deal structure, and so I think you can move a lot quicker. You also can build relationships with lenders in those particular verticals quite quickly as well.
Yeah.
So I'd recommend having like 3 or 4 industries that you're really keen on, because the truth is, once you build that pipeline, that funnel, there's a lot of deals out there, especially at the kind of range that most searchers will look into. So I do think specialising early can be quite helpful.
Yeah, and that's actually something that's come up before as well, where you've probably seen the Search Investment Group self-funded search study. It's a couple of years old now. I don't know if they've updated it, but having a sector focus tends to yield faster results. And I think also it gives you a benchmarking. You can say, right, well, I know that businesses in this industry have this sort of margin. This one's an outlier because of X, Y. So you're right that I think it's probably a sensible way to go. And also you've got a clear narrative to lenders, as you say, but also to, even if you're self-funded, you're going to be talking to equity investors as you're going through to keep them kind of aware of what you're doing. And, having a clear narrative to say, look, actually, these are the industries we're looking at. They can quickly say, well, I hate those industries. I'm not, you don't waste your time talking to me.
Absolutely.
So that's really cool. Good. So we ask everyone the same final question, which is, who has taught you the most on your journey? And that could mean, in search, it could mean in business generally, it could just mean in life.
That is a very good question.
It's a big question, isn't it?
A huge question. I'm going to upset a lot of people here, so I need to think carefully about the answer. Who has taught me the most?
I can narrow it if you want. So who's taught you the most? Either I can narrow it to who's taught you the most in the world of kind of ETA, like acquisitions, or just business.
Okay, I'm going to probably make it a bit more general.
Okay.
I'm going to say my father, more so for resilience, because he's always been someone who has tried to be an entrepreneur and set up so many different businesses, and he's definitely got a very can do, never give up attitude, and I think that's something that I've probably picked up as well. And thankfully in this case it's worked out for me. Yeah,
exactly. It's clearly served you well, right? That characteristic is very clear in your story. Darnell, it's been really interesting talking to you. I've really enjoyed it. I actually find your story incredibly inspiring. I think it's great, and I can't wait to kind of see it progress. And I'm interested to know what the exit is going to look like at some point, if there is one.
So am I.
Exactly. So, no, I've really enjoyed it. So thank you very much for coming on.
Thank you for having me.
And hopefully we'll pick it up again in a few years' time maybe and see where we are.
Yeah.
Excellent. Don't forget to follow us on Instagram at Found and Funded Pod and LinkedIn at The Found and Funded Podcast, and comment who you'd like to see us sit down with next. If you have any questions about what we've discussed today, drop me a message and let's have a chat.